Let's also get on board then Hemang Jani. Hemang, let's get in your thoughts then. Jeffrey's note on Paytm, they're pretty bullish, saying that the growth momentum is only going to continue. What's your outlook on Paytm? Do you just ignore some of the ups and downs that they've had because the long-term prospects look strong, or is it an avoid?
Yeah, good morning. So Paytm, we have been having positive view for a while, and our take is that on a monthly basis, the user base is expanding, and more importantly, the path to profitability is looking much better. So when you look at the loan products, the wealth and financial services vertical, there we are seeing a good amount of traction, and once that achieves a certain scale, the overall contribution to their profitability will grow big time. So I think Paytm, despite the challenges of disruption from Geo Finance and maybe a few other companies, the fact remains that it's a formidable player. And we think that there's a case for a 22% kind of an upside from current price point.
The trigger. I mean, Geo Financial is around the corner. The fact that they have a path to profitability is something everybody knows. What would be that new trigger, Hemang, now for a Paytm or a Zomato? Because whatever construct we are discussing, everybody knows it, that they've been the survivors.
Nikunj, I think what market would like about Paytm and Zomato is the fact that the operating matrices are improving month on month. You have all the data points, the user, and the way they've gone about, let's say in case of Zomato, the subsidiaries part, they've been able to kind of curtail the losses. And the core offering is getting better. The user base is expanding. Paytm, if you see the loan products, the wealth product, the growth is evident and it's a very profitable business. So I think once you see that happen in front of you, that gives you that confidence to participate in that story. There are not too many players. Even in this space, the platform space, you will not have three, five, seven players. You will have at least two or three players. So whoever is the leader, people would want to participate there.
Let's just get some chart checks going. Hudco, and we saw the OFS news, and yesterday the stock price, Kunal, fell flat 10%. It was a kind of decline, and there was also MMTC that had a pretty rough run. What exactly are the charts looking like?
See, it looks, we've always advised that, these are the kind of names which can move up in a hurry in a short span of time by a margin of 30-40%. But then when they start to get into a correction, exiting these stocks becomes a lot more tricky. These stocks also fall, flat on their nose. And I think that's exactly what we saw for stocks like MMTC, ITI, etc. yesterday. So I would probably expect that this could not just be a short-lived correction. This could be a series of negative trend or negative days for many of these stocks. MMTC, just for a example, I think 2 days back when the stock was at 88 levels or 89, the 200-day moving average for the stock was 37, which means that the stock is at a divergence of more than 200% from its long-term moving averages. And such kind of aberrations, they don't sustain for a long period of time. And whenever there is a mean reversion process, where these stocks correct and come back to their means, the corrections or the mean reversions is very sharp. So I think even in that aspect, I would actually expect the stock to maybe come back towards 60-65 levels, which could be a correction of another 18 to 20 points.
Okay, that's interesting. And the government is going to exercise the green shoe option as well when it comes to Hudco. But cement, and we've been discussing this space day after day. It seems like there has been a lot of news flow as well with respect to the price hikes, and that has been absorbed across the board. What's the viewpoint from a stock standpoint, Hemang, within the entire cement basket?
Positive view, I think price increase is something that people will have to deal with. Even the way the input prices also have gone up, the overall dispatch numbers continue to look good, and we think that in next 2 or 3 quarters, cement will be one space where you will see a combination of earnings growth with some M&A activity. So I think both large cap and mid cap companies in cement should do well. Ultratech being the preferred play, and some of the mid cap names, JK Lakshmi, Dalmia Bharat, Ramco. I think these stocks continue to have a positive bias.
Kunal, I think you bullish on ACC yesterday, right?
Yes.
It still looks good?
It still looks good, Nikunj. In fact, many of the cement stocks are actually showing signs of strength for themselves. Ultratech Cement, for example, has been looking quite sturdy. You've seen outperformance coming in from other larger cap cement names. ACC, apparently the stock has been holding on to its 50-day moving average since the last 1 month. There was a mild bit of volatility in between, but then the stock has managed to absorb that quite well and come back towards its 50-day moving average. So I think even after yesterday's downtick of 1.5%, still looks very attractive purely in terms of the risk reward and that slight defensive nature or maybe a low to moderate beta nature of the stock given the kind of market we are into.
I want to go back to the bond yields. We are walking up into trade this morning and the 10-year bond yield is, it's almost at 4.95. So we've gone back to that pre-war level. So that's the irritant. I mean, if you're frankly looking at one cross which could just peg us back, which has been pegging us back, would be global cues. Now what will happen because of bond yields at 4.9 and dollar index at 1.6 and a little bit of flare up in commodities, in the short term, which is when you wanted a little bit of push to come from an HDFC Bank or a Reliance, ain't going to come. Market will always chase performance, or markets will start bottoming out when valuations start looking attractive. But for that, flows have to turn. And normally when you see a combination of rising bond yields and a weak dollar index or a strong dollar index, I beg your pardon, weak works the other way around here, then flows in the near term, they always get challenged. So you could see a situation where flows in a sense could get challenged, and by the way, gold's moved up 6%. So classic risk off in the world. Yields are up, dollar is up, gold is up. Classic risk off. Naresh, this is a classic risk off. As of now, it looks like a one-day effect, but could this snowball into something more and bigger?
So as of now, we are in a flux across the world, whichever asset we look at. So gold, for example, has topped out in 2011 in terms of US dollar, and we've still not gone back to those 1950, 2000 levels and breakout, irrespective of whatever has happened in the last 10 to 12 years. So we keep seeing this short-term moves wherein gold becomes a risk-on move, risk-off move. But essentially, if we look at all the indices also, whether it is a European index or a US index or a Japanese index, everything is in a range-bound move. So for now, we are trying to find a trend, but there is none across the board. So it's just time to wait for more confirmations of a possible hypothesis, whether it's a risk on or a risk off. As of now, not really able to find a clear trend across various indices.
10-year bond yields is the story according to me. Hemang, what is your understanding of the interplay between bond yields, crude and gold now? Because now there is risk off, it's not risk on now.
Well, Nikunj, I think, crude prices, we've already seen how they have really, gone up in the last about 3 to 4 months, but markets have continued to remain resilient. Also, the bond yields, yes, US 10-year bond yields have really shot up. And even in India, post last RBI credit policy, they have gone up by about 10 to 12 basis points. I think what market would really focus upon is, particularly from Indian context, when the bond yields are going to peak out. And more importantly, you will see a divergence between the performance of the large cap and the mid cap. Because even if you see the global markets turning a little adverse and you see the sell off, that will be in the large cap space. But given the way the dynamics are playing out for mid cap and small cap companies, wherever the earnings delivery is strong, I think even when we have slightly higher bond yields and the crude prices at a higher level, I think that part of the market will continue to see certain traction based on the earnings, etc. So I think one will really have to play this entire period, taking a very stock specific view and focus more on the broader market.
Then when it comes to Bajaj Auto post its kind of quarterly numbers, given that the management as well has spoken about how the three-wheeler business has done well, they're looking at positive domestic festive sales this time around, and that their industry growth guidance has been maintained. Hemang, that's for you.
Bajaj.
Yeah, go ahead, Hemang.
Yeah. So Bajaj clearly the EBIT margin, there was a beat, and more importantly, if you look at the management commentary, both on the domestic side as well as on the export front, things are getting a little better. And we think that the newly launched Triumph has started delivering almost about 8,000 units in the second quarter. So things should get a little better. And there is also a case of some market share gain for Bajaj Auto given the premiumization and the opportunity for export. So we continue to have a positive bias there, and the target price being 5,225.
5137 for Bajaj Auto. Who would have thought that this would be a year where Bajaj Auto actually will make a comeback? And that really makes it a very interesting case in terms of Hero Honda versus Bajaj Auto. They were almost neck to neck in terms of performance. But TVS right at the top, Eicher somewhere in the middle, and Bajaj Auto has really spotted. I mean, look, their export is not doing well. But Bajaj has this very unique thing which I think Hero has failed, which is that every 5-7 years they've added another wheel to their earnings. A scooter company added a motorcycle. Then from motorcycle they became from a domestic player to an export dominated company. Now they're looking at adding Triumph and perhaps other bikes which will not have impact on the balance sheet per se. And then you got the e-wheeler business which is coming. For Hero MotoCorp, what's been the story? They split with Honda. They did not do anything in exports. They don't have presence in EV. They never ramped up or never challenged Eicher's dominance in the luxury because they thought it was too small. And now that rural, things have hit them, they've also struggled to come up with something which could be called as a premium biking experience. I mean, Harley Davidson is here and there, and that's not going to move needle for a company like Hero MotoCorp. So, markets are very smart and markets tell you which way things are. Hero MotoCorp versus TVS or TVS versus Bajaj. The stark underperformance in Hero MotoCorp, I think, is very evident. But the other one, I think, is Maruti. And Hemang, it was always Maruti and never Tata Motors. Now suddenly it is only Tata Motors, no Maruti.
Yeah, so I think both of them have done well. Tata Motors, more so in the last about 6 to 8 months, has really surprised everyone because of the way things have turned around on the JLR front, even domestic market. If you see the CV part, they've done exceptionally well. PV, they are really putting in a lot of work. We can see more and more EVs from the Tata Motors side, and that is surely positive. I think one thing I would like to add here is that Tata Motors, because of this IPO of Tata Technology, people are double counting the possible impact. In the SOTP value, about almost 20 rupees per share was already factored in. And now, because there is a deal or there is an IPO, we cannot keep on increasing our target, because that is already factored in. So I think we should be a little mindful about Tata Technology part, but the core business, Tata Motors is looking quite good.
Okay. You have a question?
Well, no, yes, I do. I was going to ask about his outlook when it comes to some of the other, auto ancillaries, some of those stocks like a Seat, Apollo Tires, etc. What would be your outlook, Hemang, when it comes to those stocks from a fundamental standpoint, largely owing to the raw material prices, etc.?
If you look at the performance of Apollo Seat this quarter, it's exceptionally good. But what is important is that from here on, you will not see incremental growth because of the way the raw material prices have moved, and somewhere the base effect will start kicking in. And the stocks have really run up big time. So I would avoid a C8 or a Apollo Tire at this point. Maybe at a correction of about 10-12%, we relook at it.
Question.
I have a question. I always have a question, See, Avan, you're forgetting we anchors. We ask questions for living, right?
Exactly.
कहते हैं ना पेट के लिए सवाल पूछते हैं. To put it very simple. And Hemang Jani does the reverse. He always answer questions, right, Hemang? पेट के लिए जवाब देना.
Yeah, I answer the question, but Nikunj, I'm a little worried about the googlies you provide me,
I hope there is no googly in the cricket match today, my friend. I'm more worried about that, given what is happening to, what's happened with some other dark horses, so to speak. I'm worried about the googlies in Pune today. Bangladesh actually has a good spin attack, right? Right, Naresh? They have a spin attack, right? You guys don't track cricket. You guys don't track cricket. Okay, we'll talk about it after the cricket match. But right now, the googly, I think, really has happened in some of the banks when numbers are supposed to be strong, but markets have not really kept up pace with what the numbers are. Hemang, how much of the current setup is pure compulsion in nature? Everybody is of the view that you should not sell HDFC Bank. Everyone is of the view that Kotak Mahindra Bank is cheap. Everyone is of the view that banks will do very well. But yet the underperformance now for this year per se, it's not been 1 day, 1 month, 1 week, 1 quarter. It's been almost a year now where banks are underperforming.
Yeah, so specific banks, let's say HDFC Bank or Kotak, they definitely have underperformed. But I think Bank Nifty or the banking sector overall, if you leave aside last 2-3 months, over a period of, let's say, about 6 to 12 months, has done reasonably okay. What is very important is that even when you see the bond yields going up, over ownership, large sell-off by the FIs, they are able to absorb that quite well, unlike earlier periods. So I think you may see a little bit of underperformance, but whenever you see corrections, that will be a great opportunity. HDFC Bank also made a mega event. I think nobody probably had thought of such a big merger come through and intricacies around it. But I think the price has settled. So yes, it will taste your patience, but at these valuations, last 15 years lowest with a 16-18% growth visibility, I think it makes sense to kind of have positive view at this point.